Welcome to The Business Behind Your Business, the podcast where we delve into the financial strategies and insights that drive success for small and medium-sized business owners. I'm your host, Paul Sweeney, and in each episode we bring you expert guests who share practical advice, real-world experiences, and actionable tips to empower you on your business journey. Whether you're a seasoned entrepreneur or just starting out, get ready to uncover the secrets to success and gain valuable insights into the business behind your business. So welcome back to the Business Behind Your Business podcast. And today we are so lucky because today we are going to get super sharply focused and we're going to get real about revenue. We're going to be ruthless about expenses and we're going to stay radically intentional about profit. Why are we going to be doing that? Because we're excited, we're pumped up, and we've got Pam Jordan from Pivot to Profit who is going to tell us exactly why we need to focus on these areas, and she's going to give us some great advice on how to move that forward. Pam, welcome to the Business Behind Your Business podcast.
Absolutely. So glad to be here, Paul.
Look, it's a delight to have you here. We're very passionate about this topic, very passionate about helping business owners, and I know you've got that passion. You've been working with many companies. I guess you'd describe yourself as a serial entrepreneur. You've got the Pivot Business Group, which encompasses a lot of different businesses. You're known as a financial fixer, which is great because a lot of businesses need help fixing profitability, understanding their business figures, understanding their cash flow, and understanding what tax is and how they can minimize it so that they can scale and grow a great business. And what is very evident, and we've only caught up briefly before we talked, but the amount of passion that you've shown for doing this, it's exciting. And like we said, we're going to get ruthless, we're going to be intentional, and we're going to be talking about profit. Pam, why is it so important for business owners to understand this, particularly with a lot of the challenges they're facing on a day-to-day basis?
That's a great question. From my perspective, it's not about what you make that matters. It's about what you keep. Far too often, business owners are looking at the ego metric of their sales. But I have known very rich, poor people because they had a seven-figure, $5 million business. But at the end of the day, they were broke because they had no profits. So from my perspective, it's much more important to focus on your profitability and how much cash you have available, not what your sales are. Because sales don't mean that you're making money. Sales don't mean that you can exit your business. Sales don't mean that you have financial freedom. Profit means that you have all of those things.
Absolutely. And look, a couple of key things there that you've mentioned is sales does not equal profit. And I think the other one that we're going to delve into in a bit more detail is that profit and cash flow aren't always the same thing. So let's look at this in a little bit more detail because we're talking about the need for profit. Why should we focus on profit first as opposed to sales revenue?
Absolutely. So profit is your indicator of financial success and your financial freedom because profit is how you pay down your debt. Profit is how you pay yourself as a business owner through distributions. Profit is how you mitigate taxes, and profit is how you exit your business. Many of the clients that we work with want to scale and exit. And if you have ever sat down at a table when it's time to exit, they don't care about your sales. They don't care about your pretty presentation at the sales presentations that you have. What they want to know is your numbers, and what they want to know is your cash flow, and they want to know your profit. 99% of businesses sell as a multiple of EBITDA, which is a factor of profit, not sales. Most businesses don't sell for a multiple of your revenue, your sales. Most businesses sell for a multiple of profit. And so unfortunately, too many business owners are looking at the wrong number as their barometer of success when they should be really looking at their profitability to say, I am winning at this game of business or I am losing.
Yeah. And look, so profit is the focus. So a lot of business owners do all their planning or their goal setting around how many sales they need to make or the dollar value of sales. Are we getting this wrong?
Yes. As simply as I can be, yes. Because I have clients, Paul, that come to me that are doing $8 million a year and they're broke. literally, I had a client come to me. He was in the HVAC, like air conditioning, electrical business. And I looked at him and I was like, dude, you can make more money as a technician working for someone else. You are broke. There's no multiple of negative 300,000 that means you're making money at this game. You are failing at the game of business. So, yes, absolutely. Sales do not equal success. It's your profitability that equals success. And far too often, again, people are looking at the wrong metric of saying I'm winning at this thing, and it's about your money. It's about money in the bank. It's about money being available for you to use for wealth growth. Because as a business owner, you want to be able to take money out of the business to put into other vehicles to build legacy wealth. And that's what we focus with our clients is legacy wealth. We're not talking about let's save $20,000 in taxes this year. We're talking about how do we take that money so that your grandkids don't have to worry about college. And it's a different game. And the problem is sales don't bring enough, are not the indicator of your kids don't have to pay for college and your grandkids don't have to pay for college. Profitability is that metric that means wealth for legacy generations.
It's pleasing when you hear that because you can't do anything when you don't have profit. You can't go and get a loan if you don't show profitability. You can't sell a business because 10 times zero is zero. It has to be more of a focus. And we've mentioned this phrase profit first, and if you're an avid listener, you would have heard us talking about this in a few past episodes particularly, but just very briefly, why is it so important to think about profit first? But it's more than just putting profit first on the page. There's some actionable steps there as well.
Correct. So I am a profit first professional. I have been doing implementing profit first for 6 years now for hundreds of companies. And it's a mindset change because it's not sales less expenses equals profit and crossing our fingers, hoping there's money at the end of the day. It's sales less profit equal expenses. And so it's making our profit a priority. And far too often, business owners aren't doing that. And so for me, we implement profit first with many of our clients, not all of them. And we don't do it exactly to the letter. We don't make you open all the accounts and do all the things. We customize it for the client that's in front of us and based on their goals. But what's amazing is what happens when a business owner stops thinking about, oh, I made $10,000 this month. I have $10,000 to spend. When in fact, I have $10,000 this month. I put $1,000 to profit, $1,000 to tax. I have $8,000 to spend. What am I going to do with it? And it's a mindset shift. And what happens is really quickly that money that you're putting aside for profit and that money that you're putting aside for tax grows. And I call it starts having babies. And so all of a sudden, you have these bank accounts that you never had before that have money growing in them that you can now do things with to grow your personal wealth, to pay down your debt, to build the next location that you never had before. Because if you just get $10,000 and spend $10,000, you're not you're not getting ahead. And this is a great tool to manage your cash so that we have got a client right now. She's in the hair salon space and she implements profit first. And she's opening her second location because she did profit first. And she has money setting aside in one of her bank accounts for the down payment and the build out for her second salon that she would never have had if she just spent all the money that came in.
I love it. And I think I've just been re-listening to Robert Kiyosaki's Rich Dad, Poor Dad. And
Oh, I love it.
it's amazing that the concepts that I'm picking up the second and third time I've read through the book. And what was interesting is he talks about how he always paid himself first.
Yes,
And whether that be by setting aside the profit or taking out the cash profit first and then paying the expenses. But he says he used that as a motivator, that he had to earn more revenue as a result of knowing what expenses he needed to cover after he'd paid himself. Because he knew
exactly.
his creditors are going to scream at him if he didn't pay them. But so how would he generate more revenue? And I love that way of thinking it, because it also creates an urgency to think more about the actions that are actually going to drive revenue. And we know we're not focusing on revenue, but revenue creates profit if we do it well.
Absolutely. And that's a very important thing. And one thing, Paul, that we see in many of our clients when they come to us is Revenue is extremely important, but I'm going to argue it's not the most important. But the problem is they're not charging enough for their product or services. And it's because they're not looking at their profitability. So when we do this exercise with our clients, we start with how much profit do you want to make? And it's in different industries, it's different. Like what you can make as a contractor or a tradesperson is different than what you can make at a hair salon or a service provider. I have service providers that have 40+% net profit. Okay, well, that's a very different ballgame than the roofing clients that I have that are hoping and praying for 9% net profit, right? And so what we do is really look at what is your goal for net profit? What are your cost of goods sold? What does it take to fulfill on your products or service? What's your overhead? And that should drive what your pricing is. And far too often, literally, Paul, we do this exercise with all of our clients. None of them are charging the right amount because they don't understand their true costs. And so they're coming to us and they're like, Pam, I don't have enough money in the bank for payroll. I can't make these debt payments. I need more inventory, but I can't afford it. What's going on? And ultimately, it's because they're not charging enough because they're not pricing based on the profitability goals. They're pricing based on what they think they should charge, not on what their actual costs are.
I'm curious to know your answer to this question, because it's a question that I ask a lot of business owners when I'm working with them. And it's a question that a lot of them really struggle with. And the question I ask is, in dollar terms, how much profit do you want to make next year?
Mm-hmm.
Because a lot of them just think, I want to make more profit, or I want to be profitable. But putting an exact figure on how much profit they want to make is a very difficult question for a lot of people to actually answer. Well, that's my experience.
Absolutely, I agree. And the problem is a lot of amazing successful entrepreneurs don't understand all that goes into profit and all that's taken out of profit. So a lot of entrepreneurs think, oh, if I make 20% net profit, I get to pocket all of that. But they're forgetting the fact that the principal portion of their loan payments comes out of profit. Right. And their tax payments in the US, we pay quarterly estimated taxes. Their tax payments, those estimated taxes come out of your profit distribution as well, unless you're a C Corp. So the problem that I find, first of all, is entrepreneurs don't even understand what profit is what's deducted from it before you can even put it in your pocket. So I have clients that are like, oh yeah, I'm doing 20% net profit. I'm like, that's great. But you also have an SBA loan and a line of credit and you owe your dad $500,000. So actually that's not enough. And so the answer, there's not a universal answer, Paul, for what your profit needs to be. It's based on your specific industry because there are industry metrics of success. We have a lot of clients in the hair salon space. I don't have a hair salon that's doing north of 30% net profit. It's not possible because of how much you have to pay your team. We have a lot of med spa clients. They have very high paid nurses and physician's assistants that are injecting people. Like that's not a $10 an hour job, right? But then I have clients they're in the coaching space and they have much smaller overhead. They're 40% net profit. That's completely possible in that industry. So the first piece is to understand what's an industry standard for your profitability, and then to look at your debt and to look at your personal financial needs before you can answer that question. Because from my answer is going to be different than the next female or male business owner based on their industry. So do I have a goal for my business? Absolutely. Is it in line with my industry? Yes, it is. Is it in line with what obligations I have for any debt or those kinds of things and tax obligations? Absolutely. But the problem is people are like, oh, I just want to make more profit. Okay, but what about your debt? What about your tax liabilities? What about the other obligations that you have that come out of your profit that you don't even realize?
Yeah, I think that it is very much tailored to your specific needs, and you've got to understand that. And that's why I think people get very confused about the differences between profit and cash flow. Because I often heard, how can I have a profit when I've got no cash in the bank? Well, you've paid off these loan payments. You've paid these taxes. That's profit and cash flow are not always going to align. Is there a strategy that we can help people with understanding that difference?
There's lots of strategies and there's lots of tools. And for me, it really comes with what their client's goals are. So if the client is trying to exit, That's a different strategy than I'm trying to open my second location, or I'm trying to pass this down to our kids. We have some clients that are, I call them legacy companies, where it's this the son or daughter is now managing the business. So the problem is there's not one answer. For me, the North Star is what are your goals? What does success look like? And then we craft an individual plan based on that. Because if you're trying to exit into 3 years, it's a very different game than I'm trying to pass it on to the next generation. Right. So if you're not trying to sell, I can make your company look like it is sucking wind, make you not pay any taxes. No bank will give you any money, but you're happy as a clam because you don't need anyone outside's money, or you're not trying to exit. But if you're trying to exit, we need to play a different game. And that's the problem that I find with a lot of entrepreneurs is they don't have a professional helping them, an accounting professional, business financial strategist, financial planner, accountant, whatever title you want to give it, that understands what their goals are. Because based on your goal is depending on the game that we're playing. The business is chess, it's not checkers. And so if you're trying to exit, we're going to play a different game than you want to hand this down to your kids. And that's the gap I see in our industry, unfortunately, is a lot of accountants come in and assume that you don't want to pay any taxes. And so they just write everything off, take all the bonus depreciation, play all those games, and then you go to the bank and be like, I'm so ready for my second location. I need a line of credit. And the bank says, well, you're broke. And you're like, but I'm not broke. And so there's just a huge disconnect. So for me, the answer and the strategy all starts with what your specific goals are. Because I've had clients that came into our sphere and they weren't ready to exit. They were playing the lifestyle game and they're burning all the money. And then someone put an offer on the table, and I'm like, okay, well, actually, you're worth 2 million more, but because of what you've been doing in your business, you're going to take a 2 million shower, like bath on this if you take this deal because of how you're running your business. Like, do you want to like actually run this business like you want to exit it? That's a different game. We can do that, and I get you $2 million more. What do you want to do?
Very much different strategies for different goals, and having that clarity around what is the actual goal that you have. If you don't have clarity about where you want to be, the path that you take doesn't really matter. You're going to end up
Mm-mm.
somewhere. But if you've got a very
Correct.
specific goal, the actions you're going to take are going to be very much directed towards that goal. And that's where we come back to being radically intentional about profit, which I love. I'm going to be quoting this for a very long time now, this little mantra of Pam's. It might become my own, but being very intentional about the actions you take, which are profit centered. Now, Pam, I do want to sort of, I'm not going to say change the topic, but we're going to pivot a little bit. Okay, we're going to pivot just a little bit because, look, the podcast that you have is Pivot to Profit,
It
and
is.
it is, and I think that's very good, and it ties back in very neatly to the conversation we've been having. But I guess we need to sort of explain to our listeners why that is the case, because we're talking about profit, we're talking about thinking about profit first, being goals centered, intentional, but stuff happens. We've
Yeah.
got we've got tariffs, we've got interest rates, we've got supply chain issues, we've got new legislation coming in, we've got environmental issues. Things happen to businesses all the time. So how do we, as a business owner, pivot our business as a result, but still keep that very focused intention on being profitable?
Absolutely. And the problem is, Paul, life happens, right? Like it happens in your business, it happens in your life. A lot of us, at least in my generation, are now taking care of aging parents while having kids in the house. Like that's a financial drain while I'm running a business, right? And so life happens. And so, but the problem is if you're just focusing on revenue, 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 and it's not profitable revenue, you're just going to be broke faster. I've had clients come to me that their financials just aren't strong and they have a lot of debt, and they're like, I just need to sell more. And it was an e-commerce company. They sold tools, like car tools, automotive tools. And I was like, dude, you're just going to be broke faster because every time you sell something, it's costing you money. And so until he realized that every dollar he made, it cost him a dollar 12, Until he realized that, he was like, oh, dang. And I was like, yeah, stop selling these tools at these prices. And if you can't raise your prices, then we've got to slash expenses. And that's the other thing that people don't understand is they don't want to make the hard decisions to tighten their belt. Because if you're in a season where sales just aren't cutting it and cash is tight, we've talked about the difference between cash flow and profit. And there's seasons in business, right? Tariffs came in. We have a client, it made their cost of goods sold go up to 112%. That's a freaking lot of money. A lot of money. And so very quickly we had to tighten our belt. And so we had a lot of staff changes, and they weren't pleasant changes, but they had to be done because we can't have a 112% increase on cost of goods sold and just suck it up. And so again, this is one of those things where people need to have a partner. They need a financial advisor. They need to have someone that's alongside them to help guide them through these decisions. Because through seasons of chaos, if you're just trying to sell more, but you're selling at a loss, you're going to be broke. And if you have costs go up that you're not aware of, you're going to be broke. And if you're not focusing on the bottom line, the net profit, the net operating income, and how much money is actually going into your bank and staying in your bank, and that's where Profit First is super helpful because you can see that number growing and going up. When COVID happens and you can't have people coming into your hair salon or your med spa or your gym, we had a lot of fitness trainers at that point that had to go online virtual training, and a lot of them succeeded at it. But if you're not looking at that profitability and you're not looking at what your margins were at the end of the day, you're going to lose this game, because selling more and not selling it profitably, you're just going to have to go to the bank, or you're going to have to go, I call them crack loans, where it's high interest rates, they drain your account weekly, these awful situations. Dude, that cash flow is going to kill you, and you're just going to be broken out of business. That's not winning at this game.
Yeah. Unfortunately, we see a lot of business owners, as you mentioned, the guy thinking he had to sell more, but selling at a loss. What you're doing is you're just digging a bigger hole, a deeper hole, but you're digging it faster, and you're
Correct.
not climbing out of that hole because you keep digging it down. You need somebody independent to take hold of you and say, look, stop doing what you're doing. You're not making a profit. You need to change the way that you're pricing. You need to change your strategy for marketing, or maybe you need to just change, I don't know, the products that you're using. It was funny, and I hope you don't mind me sharing this. My youngest son has an entrepreneurial mindset and wanted to get into e-commerce and set up his own store. So I actually sat down with him and we worked through the pricing that he thought he could sell these products for. And he said, at that price, I'm going to make this much profit. And I said to him, what about all your costs? And he said, what costs? And I said, what about your online store? The fees that, say, Amazon will take from you, the marketing fees that you have to pay to Amazon. So what we actually worked out was some of the products that he wanted to sell at a price point, he would actually be losing 30%. And unfortunately, he said, oh, okay, we can't do that. We have to look at something different. So he's then gone and looked at,
Yes.
what can I sell more profitably than those products? Because you're just going to be spending his own money. I wasn't going to be funding it, but he was going to spend his own money burying himself, but possibly selling at a discount all the time and getting into a hole. So
Absolutely. And the problem is, Paul, people do that at scale, right? And so your son and you doing it on a napkin or, a spreadsheet or whatever is beautiful before you start. But I meet entrepreneurs that are doing that. They're doing 7 million, 7 figures, million plus in revenue. And I'm like, those socks that you're selling on Amazon, it's costing you $1.18 every time you sell a pair. Take the listing down now. Because they're not accounting for those costs. They're not accounting for the drop ship costs that they have, the marketing, the 3PL, the warehousing, the shipping, even little things like software. Software kills a lot of companies and they don't even understand it, because that $29 a month times 12 or times however many softwares you sign up for, that has to be accounted for in your costs, and people forget it.
absolutely. So just trying to bring this all back together, we've got to focus on profit. Profit is key,
Absolutely.
not revenue. But if we're going to focus on revenue, we've got to make sure we're selling to make a profit. What that profit is really depends on your individual circumstances. But it's not just profit, it's also what are your other cash commitments, your loans, your taxes. What else do you have to fund from that profit? And thinking very intentionally about that. And I think you've just touched on it, those last couple of points, being ruthless about expenses, being prepared to say, no, we don't need to spend that money. Let's stop it. Let's put an end to that. It's not providing value. I think there's some key points. But Pam, if we're going to if there's one main thing that our listeners need to do, that they must do as a result of listening to this today, what is that one thing that you would say that they must do?
Absolutely. So the key is to know your numbers and to focus on your profit. Prioritize your profit. Because if you don't have accurate bookkeeping, you don't know if you're winning or losing. And if you're not tracking and not making your profit a priority, you're going to lose this game.
We could dive into another conversation just on that last sentence there of accurate bookkeeping. And I could pour out my frustrations as an accountant that sees some very inaccurate bookkeeping. But profit's essential. And if your records aren't correct, you're not going to have the right figures. So you can't make the right decision. So that's an essential step there. Pam, you've shared a lot of great stuff today. I know you're a wealth of knowledge. You do share a lot of resources. And I believe that the central point where our listeners can go to find out those things, where they can find about the podcast Pivot for Profit or Pivot to Profit, they can find out about a lot of the quality resources that you've made available to help them get started on that journey. I believe that the best place for them to go is pamjordan.com. Is that correct?
That's correct. Yep. Just go to my website, pamjordan.com.
Fantastic. And if you go there, you'll be directed to the best place for the answers that you're looking for. Check out the Pivot to Profit podcast and look, help another business owner. So encourage them to go and listen to that podcast as well. And then while they're subscribing to Pivot to Profit, make sure your friend signs up and subscribes to the Business Behind Your Business podcast, because we're focused about helping business owners grow great, strong, profitable businesses for the long term, helping them meet their individual and financial goals. And look, what Pam has shared with us today is absolute gold. I encourage you to share this. Don't keep it a secret. Help another business owner and make sure that they are growing a great, profitable business, that they are radically intentional about profit. Pam, thank you very much for sharing with us on the Business Behind Your Business.
Absolutely. Thank you for your time, Paul.
That's a wrap for this episode of The Business Behind Your Business. We hope you found today's discussion insightful and valuable for your business journey. Before we go, don't forget to subscribe to our podcast on your favourite platform. Share it with fellow business owners who could benefit, and send in your burning questions, because we love hearing from you. Missed any of our previous episodes or looking for additional resources to help grow your business? Head over to our website at thebusinessbehindyourbusiness.com. There you'll find our full archive of past episodes, along with show notes, transcripts, and links to valuable resources mentioned in each episode. Your journey to business success continues at thebusinessbehindyourbusiness.com. Until next time, stay inspired, stay informed, and keep building the business of your dreams.